The SEC is fighting its own turf war with the CFTC, the OCC, the Fed, and everybody else who wants to regulate Bitcoin and crypto. So they're fighting war by saying we're going to be tough on these people. Now, don't forget, the US government is full of baby boomers. So it's an old group of people who mistrust and have a fear of change. So there's that. So I think that's the fight that the SEC wants to have, and they want to look like they're in control of this. Meanwhile, there's 86 million millennials and 70-something million Gen Z who are now voters who have a lot of money, and we've seen them as soon as you shake the cage, rattle the cage about banning crypto or trying to do something nefarious to crypto, they get together very fast. This is why I'm thinking about the Dow. I'm guessing that institutions are attracted, and you've got institutional clients as well as retail clients. I guess they're attracted to the yield. And I'm imagining that your job, therefore, would be to give them different maturities, because the maturity they get from staking ETH is 1 year. Okay, so that's the least risky. But many people want 3-month liquidity, 6-month liquidity, or whatever it is. And is that where you think you play a role where you manage the liquidity mismatch?
Oh yeah, no, and I'll admit that's true. And the U.S. has gotten incredible benefits out of being the world's reserve currency. I would imagine that we have seen a peak in the reserve status of the U.S. dollar for a lot of different reasons. The most obvious of which is after the Russian invasion of the Ukraine, governments saw that people can cancel reserves if they want to, and so we're already well past the average length of a bear market, or had the same depth. It just kind of, you and I know, you can take pain for so long and then you have to, give in. And just there's a period of time that markets just can't go down that much longer, because people, just everyone finds
extraordinary thing for adoption for institutions. But even that's not the most interesting thing. Everything in the world is priced off treasuries. All emerging markets are treasury, treasuries plus 400, and everything in the credit market. In fact, all rates are priced off treasuries or LIBOR. And
a former hedge fund manager who retired at 36, Roul is a co-founder of the Royal Visions and American Investors. His company is a financial media company and offering services in the depth video interviews and research publications for the world's best investors. For now, subscribe to the channel and turning on the bell notifications button. So back to the main topics, guys. In a Twitter argument with Greg Foss, Roul said that the Bitcoin community has lost sight of inclusions. Former Goldman Sachs and hedge fund managers and the cryptocurrency bull Roul claimed in a tweet that he now only owns a single Bitcoin. Bitcoin, Ethereum, and other cryptos have moved in a pattern similar to stocks this year. They have tumbled amid high inflation and the Federal Reserve's interest rate hikes, a move intended to cool the economy, but that also tends to bring down the price of the financial assets like stocks, bonds, and the cryptos. Millions in cryptocurrency vanished as agents watched helplessly. Feds looked up a strong device full of ill-gotten tokens, then someone started stealing the lot. Gary Herman Green has a loft in a bathtub full of the dollar bills surrounded by the scantily clad women. The moment captured in a photo in his cell phone could be a part of this surrounding. To US prosecutor, it's evident that he suddenly came into a lot of money. Larry Horman, who is since pleaded guilty to laundering $311 million through crypto transactions, swear up and down he was not involved in the despairing act.
Digital currencies were mixed this morning. By noon Eastern, Bitcoin traded above $20,000, Ether was worth about $1,300, and the meme token Dogecoin dipped to 6 cents.
I think it could possibly continue because the Fed has to be aware.
But you're quite bullish on the fourth quarter. Where was that come from?
I'm quite bullish on the fourth quarter. I feel like the Fed can't afford to not acknowledge the global risks that it is essentially causing, right? It's and causing for good reason because of inflation. But the fact remains that it has to look at forward-looking inflation numbers, and they're all going down. If you look at housing, pending and new housing sales, housing prices, inventory build, they're all falling dramatically. The issue is that as the numbers seep in, they're a mixed bag. So they're very much backward looking at the moment, looking at CPI numbers, core CPI numbers, which are all backward looking.
Bitcoin hit a high of roughly $68,000 per coin last November, has pointed to around $20,000. Ethereum is the second largest cryptocurrency by market value after Bitcoin rose to a high of around $4,700 per coin last year and now sits close to $1,300. A major force driving cryptocurrency prices down is the US central bank's hawkish action to rein inflation. Amid higher inflation and the macroeconomics headwinds, it's expected that the Federal Reserve will raise interest rates at its next meeting. The last couple of years have proven this is the false. When the coronavirus pandemic crashed the global markets in March 2020, so it fell Bitcoin falling by 57%. Stock markets and the cryptocurrency then both recovered and rose at a struggling rate, which analysts believe was caused by a combination of the free time, disposable income and the pandemic-related money pumped into the world by governments. Financial experts Robert Kiyosaki calls Bitcoin crash best time to get rich. Does he advise investing now or later? Bitcoin continued its roller coaster ride on May 20, gaining more than 30% over a 24-hour period that saw cryptocurrencies price swing from a low of $28,800 to a high of $30,000. Bitcoin is still down by more than a third time of the 2022 amid a broader cryptocurrency crash, which could mean this is the time to buy, according to at least one financial guru. Roul said as a micro investor, he expected global assets will largely recover in 12 to 18 months as inflation and the recession will be in the rear view mirror. He believes that the Feds will lower interest rates despite the commodity prices possibly hiking up in the coming years and a half. Last week, the Federal Reserve announced the open 5% interest rate hikes, the greatest monthly hike since May of 2000. Both the crypto and the stock markets have been collapsing in the aftermath, with Chairman Jerome Powell promising multiple equivalent hikes in the months to come. Powell claims that the equity markets have already priced this in and that both credit and the bond markets are just beginning to do. All he believes is bound to break lower, which will give an excuse for the Federal Reserve to quit tightening by July. What could stop the bear markets in its track? With Ryan Dietrich. October is known as a bear market killer. We shall get into one of the world's Ryan Dietrich in a few minutes, but that the guest of its following terrible September when the S&P 500 declined 7% or more, the market rise about over 5% and average in October, and sees a median gains of 1.81%. That's the better than the average of the full October. October is a positive in years following in outside Septembers of lost 55% of time versus 57% of the time for all Octobers. In addition, the best October returns have a historical record when the S&P 500 starts the month below its 200-day moving average, and that, my friends, is currently the case. Bloomberg Commodity Strategies Mike McGlone expects the price of Bitcoin could still hit the $100,000 by 2025 once the bear market subsides and the crypto prices recover again. A panel made up of more than 50 crypto experts by Finder also expects Bitcoin to reach at least $100,000 by 2025. It is just a question of time. For now, subscribe to the channel and turning on the red notifications button so you will never miss any more future fascinating and interesting videos in the terms of the Bitcoin. So see you next time.